Welcome traders to this educational video of Nifty Analysis, episode number 25. We have seen that markets have corrected significantly on the back of the fear of coronavirus outbreak in the entire globe. Now, currently we are looking at the monthly time frame of Nifty Spot, and we have seen that Nifty has made a bottom of around 8,555 on the monthly charts. The first thing which I can see over here is that there is a trend line breakdown in the RSI, which is a negative sign. All right. And we also have this big red candle, which is already trading below this 50-month simple moving average, which is not a very positive sign. But once again, let us be very frank that this is 17th March and still we are not near a month end, and this is a monthly time frame. So by the time 31st March comes, this candle could be totally different. All right. But there is one definitely positive sign over here, not a very positive sign, but I could say some sort of level or a band. You can see this particular entire bull run from the bottom of 2016 to the top of Jan 2020. This particular level, which is the 61.08% retracement, is around 8950 levels. All right. And just below there, we have this particular smaller cluster, candlestick cluster also. So according to me, in monthly time frame, 8550 to 8950 is a very decent support for the market as of now. Apart from that, we cannot see anything in the monthly time frame. Now we will need to shift our attention to the weekly time frame. In the weekly time frame, we can see one thing. RSI has gone below the 30 level. I think this has happened after 2011. So this is a significant note which we should do. This clearly shows that the momentum on the downside was very, very strong this time when the markets corrected. But it is also a fact that yes, we are oversold even in the weekly time frame. All right. Now, one more thing which I can see over here is that this particular candle seems to be a very strong hammer. And why has this come? This has occurred because 95.50, 95.40, 95.50 was a very strong support as per Fibonacci extension. I was not able to make videos in between because I was actually on a vacation, but on my Twitter handle I had recently posted 96.50, 95.50 seems to be a stronger support. Whether it will hold or not, obviously market will tell, and I clearly mentioned that these are not predictions. So basically we saw that 89.50 to 85.50, this entire zone was a very strong support in the monthly time frame. Now in the weekly time frame, we can see 95.50 is a strong support. So what we need to understand is when the corrections or the rallies are very big, at times we cannot have a level, a specific level. If someone asks you that which is the level where the market selling can halt, we need to understand at times there will be levels and at times there will be bands. So from 95.50 to 85.50, this entire 1000 points band is a strong support. Now, obviously, will this hold or not? No one knows. And we can see volatility is extremely on the higher side. Now, let's go ahead to the daily time frame. In the daily time frame, there is one positive thing which I can see is this is not a hammer, but yes, we can see that from the support of 85.50, market has bounced back pretty nicely. And if I convert this chart into a line chart, we do have a positive divergence. We can see price making lower lows and we can see RSI making slightly higher lows. Now, what does this mean? Does it mean that we have bottomed out? No, it clearly shows that markets are tired to go down. All right. If this price keeps on continuing on the higher side and if this RSI raises, then the chances of market bouncing back, not a bottom out, but a temporary bounce back will slightly increase, which will be a sort of relief rally for the people who have been stuck at slightly higher levels. We need to understand that. Now, what we need to understand, second thing, is that the volatility has increased significantly. Like if you see the ATR indicator in the charts, it is clearly showing extremely high volatility in the markets right now. We will be expecting 250 points to even 400 points move in 50. In fact, I will say 300 to 400 points move in Nifty will be very common. And this should come down. First of all, anyone who wants to trade in this market first needs to understand that the volatility currently in the market is so high that your stops will be triggered on the higher side. And even if you go short, your stops will be get triggered. Even if you go long, your stops might get triggered. So one needs to understand, first of all, it is a good idea to avoid trading in this sort of market. And even if you have a very high probable trade, you need to cut down your position sizing to minimum 50% to limit your losses, because in higher volatility environments, your profits will be higher and your losses also will be higher. So automatically, if you lower down your position sizing, you will get a decent profit if you choose to trade. All right. So summing it up, in the monthly time frame, I told around 85.50 to 89.50, this entire band was a support. And again, 95.50 was a very strong support in the weekly time frame. So once again, from 95.50 to 85.50, this entire 1000 points band is a very strong support for the markets. Now, whether this will hold or not, we have no idea. But yes, yesterday's move has created some sort of positivity. Yesterday's fall has created some sort of positivity. We have a positive divergence, but the market needs to move higher. If this market keeps on moving higher, yes, we will possibly go and test in terms of levels. We could test possibly around, we can say somewhere around the midpoint of this candle, 96.50. We can test 99.50 and possibly somewhere around 10,200 or even 10,300. So these levels can be tested, but one should not forget that the momentum of this correction is extremely high. God forbid if something bad happens, some bad news comes in, everything bad is going on in terms of coronavirus outbreak in the globe. If we sustain below 85.50 for 1 day or a 2 day, then the momentum on the downside will in fact increase even than the current market scenario, because whenever a positive divergence is broken on the downside, the momentum is extremely high. In fact, we had a positive divergence somewhere here in fact, and this was broken, and after that you can see the momentum increase very, very violently. All right. So this is my analysis from my side. Be very wise, trade very, very wisely, and do not be aggressive in your trading approach as of now. This is the time to save money rather than being extremely aggressive. If you have a trade, I'm not saying do not trade, but try to reduce your position sizing. And the levels which I've given on the higher side, these are the levels if at all we have a pullback. I'm not speaking as of now of a complete bottom out. All right. So trade wisely and trade safely.